Hello, this is your daily dose of financial market trends. Imagine turning $10,000 into $40,000 in 7 months, then watching nearly a quarter of it vanish in a single day. That's exactly what AMD investors just experienced, and it's our top story this morning. We're coming into Friday's session after a mixed close yesterday. The S&P finished Thursday at 7709, down about 0.2%. The Nasdaq held steadier, dipping just 6 basis points to close at 26,348. The Dow had the roughest day, losing 85 basis points to end at 53,885. The VIX remains calm at 15, while the 10-year yield climbed over 1% to 4.67. Let's dig into what's moving markets. AMD is absolutely dominating the conversation across multiple channels this morning. The chipmaker has been on an incredible run, with leveraged positions seeing explosive gains over the past 7 months. But earnings results triggered a sharp reversal that wiped out substantial value in just one trading session, illustrating the double-edged sword of semiconductor exposure right now. The stock is seeing heavy discussion across trading communities as investors debate whether this pullback represents a buying opportunity or a warning sign about chip sector valuations. Meta Platforms is drawing attention from several different angles today. The company is dealing with emerging concerns around AI security vulnerabilities affecting major platforms, a theme that's becoming increasingly relevant as these companies deploy more sophisticated machine learning systems. Meanwhile, recent regulatory filings are keeping institutional investors engaged. Meta's relatively flat performance masks what's actually a pretty eventful news cycle for the social media giant. Microsoft is in the spotlight as trade tensions heat up around semiconductor materials. The company gained over 2.5% recently, but now faces uncertainty as the US has imposed a 15% tariff on key chip materials in response to Chinese competition. This hits Microsoft's hardware ambitions directly, particularly around AI infrastructure and cloud computing expansion. The move is sparking widespread discussion about how tech giants will navigate rising input costs and potential supply chain disruptions. Tesla rounds out our top movers, caught in a concerning development around cobalt supply. The Democratic Republic of Congo has launched an investigation into uranium contamination in cobalt exports. And that matters because the DRC supplies the majority of global cobalt used in electric vehicle batteries. Tesla slipped over 0.5% as investors digest the potential for supply disruptions or cost spikes in a critical battery component. This story connects directly to the broader question of whether the EV supply chain can scale reliably. 3 geopolitical scenarios are shaping risk calculations today. First, the U.S. tariff on semiconductor materials versus China is escalating trade tensions in the critical chip supply chain. There's a 25% chance we see negotiations within 60 days that produce exemptions or reductions, which would ease cost pressures for chip manufacturers and spark a tech sector rally on improved margin outlooks. But there's a 45% probability that China retaliates with export restrictions on rare earth elements or other critical materials, severely disrupting semiconductor supply chains, driving input costs sharply higher, and triggering broad sell-offs across technology and growth equities. Second, yen intervention and currency market stability are raising red flags. U.S. authorities recently sold euros to support the Japanese yen without coordinating with the European Central Bank, creating concerns about unilateral currency interventions. The optimistic path, at 30% probability, involves major central banks establishing a formal coordination mechanism that reduces foreign exchange volatility and benefits financial sector stocks through improved stability. The bear case, at 40%, sees uncoordinated interventions triggering competitive devaluation attempts, surging currency volatility, disrupted trade flows, and a flight to safe haven assets that pressures risk assets broadly. Third, the DR Congo uranium-contaminated cobalt exports investigation threatens battery supply integrity. There's a 35% chance contamination is isolated and quickly remediated, allowing EV manufacturers to maintain production schedules with only minor price increases. But a 40% probability exists that contamination is systemic across multiple mines, forcing export bans that spike global cobalt prices sharply, compress EV producer margins, and trigger sell-offs in electric vehicle and battery technology stocks. On the housing front, the 30-year mortgage rate sits at 6.66%, barely changed from a year ago. Existing home sales are up nearly 3% despite these elevated rates, testing whether the market can function in this higher-cost environment. Meanwhile, inventory has climbed to 9.3 months of supply, creating potential pressure on prices if demand doesn't keep pace. 5 things worth watching as we head into today's session. First, semiconductor volatility is the new normal as trade tensions layer on top of earnings uncertainty. Second, currency intervention without coordination introduces a wild card that could amplify moves across all asset classes unpredictably. Third, EV supply chain risks are broadening beyond lithium to include cobalt contamination concerns that could materially impact production timelines. Fourth, housing is testing whether transaction volumes can normalize at mortgage rates near 6 2/3%, with rising inventory adding downside risk to prices. And fifth, tech platform security around AI deployments is becoming a real factor for the largest cap names, not just a theoretical concern. As always, this is educational content, not financial advice. Do your own research and consult a professional before making investment decisions. That's your Morning Market Digest for Friday, August 7th. We'll be back Monday morning with everything you need to navigate the week ahead. Trade smart out there.